Section 5, monthly income and combined housing expense information. Let's look at the gross monthly income. And here's the word gross. Whatever you get paid, let's say you get paid $6 an hour before tax. You use that formula, multiply the hours of the week, multiply number of weeks of the year, divide by 12, that's your monthly income, gross before tax. Now, if you are a self-employed, let's say you report in your tax return that you have a W-2, you have the 1099 for $100,000, for example. You can't use the dollar amount on 1099. What it really means is you got to look at what it is that after expenses, that is your gross income. Okay, so you take whatever somebody will pay you is 1099 before expense. Then you have to take the expense out. Then it becomes your net income before tax. Let's look at the just the base employment income. So that's the monthly income. In this case, the example is $6,709, $6,709. This individual has no overtime, no bonuses, no commission. The overtime, bonus, and commission, that's the dollar amount that they take the average for the past 24 months, and that's the monthly average. Okay. Let's say you have overtime only 1 year, but you don't have the next year. You know, the underwriter may waive their right to count or not to count. The best thing to do is to take the average for the past 2 years, and the underwriter would reward that. Okay. So when you interview the client, you got to interview the client for the duration of 2 years, not just this recent month. The reason, let's say your borrower knows that he or she will be buying a home, so they put more overtime in recently. Just because they put the overtime in last month, it doesn't mean it will stay there for the next 2 years. And that's what I mean. Now, if you know the column next to that is a co-borrower. In this case, I only have the borrower to deal with. Now, let's say if this person have a second job, where do you put it? On the bottom of the form, look at B-C. B is borrower, C is a co-borrower. So let's say if this individual has a second job, that's where you put it. B is borrower, and then the name of the employer, the address. The monthly income, when you put it there, it will populate under other income. Now let's take a look at combined monthly housing expense. You have two columns, present and proposed. For a single house, you have principal interest, you have insurance and tax. Now for townhouse, you have the same thing, plus homeowner association. For the condo, you got the same thing, but you don't have homeowner insurance, but you do have a condo fee. So just keep in mind that you want to calculate the monthly expense. The proposed monthly expense correctly is depend on the type of home that you buy. Now for the present, if you rent a home and then you buy a home, that's a simple case. If you own a home, you sell a home, and now you buy another home, that could be very simple too. When it gets complicated is when you own a home as a primary resident, and then you buy a second home, or you buy the investment. That's when the complication come in. What it really means is the present is your primary resident mortgage. The proposed for the second home, that is a second home. So basically the housing expense, for the front and back ratio, basically is a present plus the proposed. So it can be very high. As far as the investment, you have the present, which is your primary. The investment could be proposed. So keep in mind that the housing expense, it can be very complicated if you do not understand. Now, once you look at the present and the proposed, particular on the purchase case, that the client rent and now they buy something. Sometimes the underwriter prefers payment shock. What it really means is they look at how much you pay now and what's the proposed monthly mortgage payment. If it's more than 25%, they may have questioned that. So just prepare to understand that the present and the proposed. Okay, the closer it gets, the better it is. 25% different is the best, and it's depend on it case by case. That is the end of section 5.